Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Partha DeSarkar, ET and Global CEO, and Srinivas Palakodeti, Global CFO at Hinduja Global Solutions, joining in. Welcome to the show, gentlemen, and always a pleasure to speak to you.
Thank you, Hiral.
My first question.
Thank you for having us.
Sorry, I missed what you said.
No, I said thank you for inviting us. Sorry.
Right. So overall, let's start with the impact of COVID on the business as well as industry. Overall, since March 2020, we've seen a lot of businesses which did see a major negative impact. However, a lot of companies turned this into an opportunity, tried to survive, in fact, tried to exceed what they could achieve, if there was no COVID as well. And I think your company is one such where we've seen really good turnaround, a record year where HGS has turned challenges into opportunities. So congratulations on that front as well. Let my first question go to Partha. Partha, overall, how would you actually describe this entire phenomenon?
I would say I'm very pleasantly surprised because when we got hit by it in March and April, April was very difficult. We did not really know how we are going to handle that. But one thing went in our favor. Work from home as a concept was familiar with us. In Canada, we had about 1,000 people who were working from home for the past 2-3 years. So it wasn't something totally unknown. What we needed to do was to quickly replicate the best practices that we had nurtured in Canada for 2-3 years into the other geographies. So rapid deployment of work from home, sending people home, making sure that they are safe, making sure that they have good connectivity, sending people dongles, headsets, UPSs, all of that. You know how the infrastructure is in,
Correct.
in many of the developing countries. Broadband is not all that good. Power is uncertain. So initially we did not think about UPS, but then we had to send it because we would lose productivity because of power. So by June, I think we had recovered almost 80% of our productive capacity. So first quarter, I would say, was a little subdued, but by quarter two, we knew that, okay, this is going to be an absolutely fantastic year. One more thing helped, apart from my experience of having done work from home before, which was, you see, our revenue doesn't have too much of exposure to travel, tourism, and hospitality. These three sectors have been wiped away in this pandemic. And 54% of our revenues come from healthcare, which obviously was the sector absolutely in the forefront of fighting COVID. So that helps. The fact that we had a good mix of telecom and technology, which also ended up being a very important factor in people remaining productive during the pandemic. All this actually helped. So we did see very good demand from our clients, and that's just the sectoral composition of the clients that we serve. Our supply was not impacted because we could send people home and we could get them productive in record time. All of that ended up giving us a really record-breaking year. And on top of that, work from home actually turned out to be cheaper. As an operating model, work from home is cheaper because you're not traveling. There's no utility expense. There's no maintenance expense. We provide transportation to people to come to work. Those things are gone. So on a total basis, for the full year, we've saved about $6 million.
Wow.
So, a combination of all of that has been what's led to a really fantastic year for us is what I would say.
Absolutely. So overall, Srinivas, let me come to you as well. Clearly, the kind of save that we've seen on the back of the efforts that were taken, logistical cost was one of the major ones. Are you expecting this kind of trend to continue going ahead with regards to, say, work from home, etc.? Or do you think it will somewhere turn into a hybrid model wherein this kind of save is something which will not be sustainable?
Good question. So, a lot of what we do is decided by what our clients want us to. Clearly, we had a buy-in from all the clients before we moved to work from home. And right now, with while vaccinations are being rolled out, nobody is pressing us to come back to start working from delivery center because obviously employee health is foremost, whether it is for us or whether it's for the client. That is a foremost important. But the way I see it is that going forward, we would look at a hybrid model. There would be some employees who may be asked to come to work, and some of it could be related to the nature of work they do, or it's the kind of training which is required. But there'll be one portion which would always be, or a proportion which would get to work from home. 2 years back, if we had asked our clients, can we do work from home? A lot of them would have been shocked and would have said outright no. But obviously, views keep changing. But outside of that, there's clearly what we call support functions, shared services. And then that helps us. So there, purely what works best, and there are no requirements from the client side. And the other aspect of this entire work from home, is that you are now able to tap into a much wider pool of talent. Earlier, you would be forced to look at X kilometers radius around each of your delivery centers, wherever they are. But now you could recruit from any part of the country or any of the geographies where you're operating. And so you do have access to a wider pool of talent. That definitely helps us from an operational point.
Right. So with all of this, the kind of growth that we've seen overall in terms of where FY21 goes, is that something which is sustainable in the coming years as well?
I won't be able to give you specific numbers because we don't give guidance. But as of now, based on the visibility that I have in Q1 numbers, I think we will be able to sustain the growth because our pipeline actually, what has happened is quite a few new logos that we won last year ended up coming towards the end of the year, which means the full year revenue impact of those clients and those contracts, we only got about 3-4 months of that, maybe not even that. So when you annualize that impact, because those contracts will be up and running from April and all, I think we should be able to do a good job in revenue growth. Yeah, that's my assessment.
Right. So overall, what has been the major change in strategy that we could see from here on, Srinivas? Because clearly business strategies have changed. The way of working has changed. So for a Hinduja Global Solutions, what's going to be the strategy going forward to achieve the expected growth?
So there are different aspects, right? One, we've changed from a business strategy point of view. The whole way we are working has changed. Right? Earlier, one is in a way the simpler part of moving out laptops, PCs, dongles, UPS, but that's only step one. But the next step is actually, how do you recruit people? How do you train people? Because all your systems need to go digital. There's no more classroom training, that is over, right? So everything is now Zoom, Teams, whatever, or online, or teach yourself, pace yourself as you learn. Computer-led training. One of the other things which we did as part of our whole enablement process is to change the way we do recruitment. In a normal course, somebody who's a potential candidate would come to our delivery center. He would wait. He would be, interviewed. Maybe he has to go through some tests, and then if he succeeds, if we find him appropriate for what we are looking for, he would get an employment letter end of the day. So he would wait, and for him it's probably worth it because he or she is going to end the day with a employment letter, and then he can expect to start earning. Clearly, if everything is digital, nobody is going to hang around in a Zoom or whatever, Teams, whatever be the form, for the whole day. The behavior changes completely. So we have to redo everything, and we have done very successfully in US. We have put a bot. So essentially, the candidate comes to our website, interacts with the bot, we apply all the filters to see somebody somebody who's underage, not qualified to work, could be from a state where we are not allowed to hire or we don't want to hire. The online test is administered. We make sure the profile matches. And what would take a whole day has been shrunk 1 or 2 days has been reduced to 1 or 2 hours, right? So that's a big change which we have going. Also, we are changing our offerings. Obviously, with everything going online, all clients are looking for better digital experience for their customers, right? So one is to go to a, let's say if you're servicing a retail chain, one is to the experience you would have going to the retail chain and buying. The other is to go to the website of the same retail chain and order whatever you are buying, right? But the experiences have to be equally good, if not better, on the digital. So obviously the whole digital experience for the customer needs to change. So so our offerings are also being changed to meet the requirements of the customer, especially on the digital side. And of course, we are looking at opportunities for improving our own internal processes. What can we automate? Where can we, make the whole process more efficient, which keeps a check on our cost structures.
Right. So with all of this, if you have to divide the business between non-voice and voice, do we expect or are we seeing a change that's happening between the revenue mix for the company, Partha?
It will take time, but clearly with digital coming in and technology coming in as a larger part of what we want to grow, it's already improved significantly. And, from a high of something like 75%, it has dropped down to 60 already. So we see as digital grows, as what we call customer experience transformation services grow. Those are all technology led and cloud led. So as those things come in, then we clearly see that technology services becoming a bigger part of the pie than it is today. And yes, so far as the revenues are concerned, therefore the revenue mix will also change.
Okay. And overall, Srinivas, with regards to the different segments of business, if we have to look at a revenue split by vertical, where are we seeing higher potential from here on? I understand healthcare has been one of the major focus areas, but are you seeing any other industries which have good potential to probably start taking a bigger pie of the revenue in the next 3 to 5 years?
Yes, apart from healthcare, one of the standouts for us, especially in FY21, has been our UK business. And the very strong growth which we have achieved in UK has come primarily from the UK public sector. The UK government, through its various departments, outsources a lot of work. And the process they follow is that there are a set of pre-qualified vendors, and HGS is one of them. And any work outsourced by the UK government departments is offered to these pre-qualified vendors. And after that, it's for us to decide whether it's what we can do and get the business. So we have seen a lot of growth in FY21 in UK coming from the UK sector. A lot of it is related to, the initiatives from the healthcare department of UK, obviously coming out of COVID. The other has been related to support needed for Brexit. And, we believe the outlook and the forecast for our UK business continues to be very strong. And the advantage of, unlike the experiences or expectations with me there in India, there's no issue about payments, etc. In fact, the UK public sector clients probably pay better, faster than the private sector. So it's good for us from a growth perspective as well as from a cash flow perspective, as we have won more business from UK public sector.
Okay. And apart from this, when I was reading that 37 new engagements is what we signed in terms of services in FY21. Yes, they are smaller projects, but what's the kind of potential do we see they could grow to in terms of size, Partha?
Well, some of our IT services projects will probably end up being small size projects, but eventually if we're able to cross-sell BPO services to them, then we may be able to, if you're able to sell BPO service to them, then we may be able to grow the, the stream of revenues coming from them. So yeah, every new logo has a potential to become double, if not triple. So I'm really looking forward to adding more of these new logos, because that's just the start of a relationship. And if you do a good job, then there is, these are all good companies, and therefore there is never, one can never fully assess the potential of what this relationship can evolve into, because it could really be something very, very big.
Right. And overall, Srinivas, you mentioned about the business that we're doing with regards to where UK goes, which is mainly led by the public sectoral vertical as well. So if we see the revenue mix with regards to concentration of regions, again, USA still is the highest with almost around 73 odd percent. Exposure to UK has been increasing. India has gone down slightly as well. So again, what's the concentration level we are expected to see with regards to different regions where you're seeing growth? Is it that USA, UK will continue to increase, and probably you have India, which will keep going down, because we've seen a significant reduction from a 9% to a 4%?
Yeah, so let me address the first part. What you're saying is right. There is a drop in the revenues originating from India, but that dip is primarily happened because somewhere towards the end of FY20, in end of Jan 2020, we sold off our India domestic business.
Correct.
Right. So, so obviously we had about 10 months of revenue in FY20, and that had no revenues from that business in FY21. So clearly, the rest of the business, what we retained, has grown, but the drop in percentage is primarily because of the drop in the India business. And as I said, our UK business has grown significantly in FY21, and hence its proportion has also increased. Going forward, we do expect growth in US, UK, in fact, in almost all the geos and all the verticals. The proportions may change primarily because of faster growth in one particular country or a geo. But the growth is not happening at the expense of the other region. Some of the proportions may change because of faster growth in one region compared to the other region. And broadly, I don't expect share of US to change significantly. There may be some interstate changes between UK and Canada.
Okay. And overall, if you see with regards to where the profitability goes, the margin numbers go, we've seen a significant growth that's come in terms of FY21. I think if we see the last 5-year trend as well, the profitability, the EBITDA, it's reached the highest levels as well. So is this growth sustainable?
Yeah, again, you're putting me in a spot because we don't give.
No, I don't need a number from you. I don't need a number from you.
Yeah, we would hope to. I think there are regions that are still low on profitability, and those can improve. So while I don't see anything else diminishing, the other thing that's going to change as a result of this hybrid working model is we're going to go capex light.
Correct.
Because we're not going to invest a lot in brick and mortar infrastructure or building centers and all of that, right? We're going to try to manage with whatever we have today. And we are also evaluating if we can give up some of the lease rentals, if it is possible for us to close some of the leases early or sell some of the buildings that we own. We're trying to do that as well. So it's going to be capex light for sure. Work from home, I told you, is cheaper. And if our clients allow us to continue work from home even in the coming years, then we will continue to have those savings reflect in our margins. But one of the trade-offs can be the customers can say that, listen, you're working in a cheaper delivery model. Can you give us a price discount? So it's always a negotiation between if your operating cost has gone down, then how much of that will you give it back to your clients? So hopefully, touch wood, we should be able to maintain our profitability margins, is what I would say.
Right.
And the biggest contributor to that is how the rupee and the Philippines peso behaves against the dollar, because that is something that we don't control.
Correct.
And, it's been a big booster to our earnings this year as well.
Right. So overall, Srinivas, would it be right to say that from here on, the business ROC as well as the free cash flow to EBITDA is here to improve further?
And that's what our endeavor would be, right? Find out, clearly the target priorities is to grow and not just pure growth, grow profitably. And also in a manner which is, as Partha mentioned, capex light, and then drive the other ratios which we are talking about. One of the things which we have done very successfully in UK, which also accounts for our the very rapid growth which we have achieved, is to move a lot of the technology solutions into the cloud. Otherwise, the traditional model would have been, if there is a growth, you go and invest in capex, and so there is outgo, and if volumes fluctuate, even if there is seasonality, you are stuck with costs which you're trying to recover. What we have done in UK and which we'd like to replicate wherever possible is to move everything into a cloud, like a cloud telephony kind of solution. So there are two implications. A, your OPEX does increase for sure. What would happen is that you pay purely on a per second or per minute. It's pay as you use model. So if there is seasonality during the year, for lean months, you obviously get a respite. You have to pay less, and you don't find paying more of the volumes go up. The other aspect is that it opens the door. Once you have solutions on the cloud, you can do a deeper analysis and look for opportunities and deliver savings for the client through automation, which is more difficult if it is on the traditional capex heavy model. So that's one of the other things which we are pushing, to have more and more solutions which are cloud based. So that's one of the focus areas going forward.
Right. And overall, Srinivas, with regards to where currency goes, now obviously majority of our revenues are coming in from the non-Indian market. So we do have a lot of incoming that happens in Forex. What's the kind of hedge strategy that we are adopting?
So we have, for lack of a better word, like an SIP in hedging. So we have a consistent policy in hedging. We don't try to take the time the market. So we take forward covers on we broadly have three buckets. First, the next 12 months, the next 24 months, and next 36 months. Obviously, we cover less of what is in 2 years from now and 3 years from now. But we pretty much try to cover up to about 75% of our forward covers on a rolling 12-month basis. And this is what, as I said, do consistently and don't try to time the market. And we found that in the long run, it helps us extremely well.
Okay. And overall, if you go to see with regards to where working from home goes, how has attrition been in the industry?
Actually, attrition has been the lowest ever, because you get a lot of flexibility to the workforce. There's no trouble about 3 hours commute, 4 hours commute that typically would happen in a city like Mumbai or Bangalore or Manila. On top of that, this gives us the flexibility to hire part-time workers. You can work in the morning, you can work on the day, you can work in the evening, depending upon what suits you. So we would be able to therefore be a lot more flexible in the kind of people that we hire. And we also think that this brings in a new talent pool. So for example, caregivers, women at home who are very qualified but really can't leave home because they've got caregiving responsibilities and all of that. But they do have windows of time in their day that we can utilize and tap into, right? So I believe that this is, if work from home becomes, and which I strongly believe it will be, it's going to be so fundamentally catered to the individual that I can almost individualize how much time I want from anybody who wants to work for me. And whether he or she wants to work the night shift, whether he or she wants to work the weekends, all of that can be catered. And I think that's going to be a big impact on making this industry very attractive, and also attrition levels going down. That's what my belief is.
Right. And very lastly, overall, the government recently issued guidelines for BPO firms to make India a favorable destination for voice-related services. So a lot of guidelines that have come in with regards to where OSP goes. How big a positive could that be for a company like ours?
It is huge. Earlier, we would not be, there were a lot of licensing constraints about how much you can work from home. There were guarantees required, fairly large amount of guarantees required, and all of that. So I think it's been a massive change that the government has brought, and it's going to be transformative for the work, transformative for the services sector and the knowledge sector. For example, people who can work from home and therefore don't need to come to work to come to office to work. So it's going to be transformative. I really thank the government of India, and NASSCOM has actually played a very, very strong role in pushing this agenda through. And the government has been absolutely brilliant in getting these shackles off whatever was coming in the way of effective work from home.
Right. And Srinivas, anything from your end, according to you, that needs to be done by the government? Because usually when we talk to manufacturing companies, etc., they talk of PLI schemes, they talk of different measures that the government can give out. However, for an industry like yours, do you think any further push is required?
At a generic level, I think, we have those rankings for ease of doing business. And clearly, forget the ranking part. What I think the government needs to do is obviously in terms of improving the overall ability to do business earlier. Right? Partha mentioned, again, it's an infrastructure-led issue. But, if you are able to have high level of connectivity, good bandwidth, continuous power supply, it just opens up a whole lot of opportunities for people to work in a BPO as well as other companies. It also gives, as Partha mentioned, ability to hire people from different categories, people who want to work full time, part time. So that's what I think is needed to give the overall push, right? So that's what would be I think people generally talks of taxes and incentives. They are important, but if we are able to reduce our overall efficiencies and reduce the cost of operations, I think that just gives the whole country a big boost.
I will add to that. I think the labor laws need a lot of change because labor laws per se don't really apply to knowledge workers. I think there has to be a separate set of laws which define employment for knowledge workers, which is what our workforce is. We are governed by Shops and Establishments Act, and therefore, would the Shops and Establishment Act of the headquarters matter, or if somebody is working from a remote location, would the stop, and if that's across the state, will the Shops and Establishment Act of that state matter? All those things require a lot of clarity because work from home can only gain momentum if we create a new code for knowledge workers which allows flexible working, which allows remote working. I think that is going to be transformative as well because that's going to unleash the huge talent base that India has. Working stay-at-home mothers,
Correct.
people with disabilities who can't move from home, but they can work from home very, very productive. If some of those things are done proactively and create a new wage code for knowledge workers, that is something that the government should be looking at. Because labor code actually, frankly, doesn't apply to us. We're not really using manual labor to do the work that we do.
Absolutely. A very well made point as well. Thank you, Partha. Thank you, Srinivas, for joining us on the show. A pleasure speaking to you. Once again, congratulations for turning these crises into an opportunity for not only the company, but for people around and for the employees as well. Good luck for the coming years. Thank you. Stay safe and speak to you soon again.
Thank you, Hiral.
Thank you so much. Thank you for inviting us.
Bye-bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.